Well, good morning.
I'm glad I saved my blue suit for another day. We'd all.
Oh my God, that's funny.
I thought we got the memo.
Thank you. Good morning, and we will go ahead and call to order our Oklahoma City MAPS Investment and Operating Trust meeting for November 20th, 2023. Item 2 on our agenda is approval of minutes, and we'll go ahead and take both of these together. In your packet were the minutes for the August 12th or 21st meeting, as well as the November 7th training. So if anybody has any changes, modifications, otherwise I take a motion in a second. Okay, please cast your votes. Motion passes. Thank you. Moving on to item 3, items for consideration. A, receive the quarterly investment report for the period ending September 30th, 2023. And I think, Doug, you're here to tell us about it.
Good morning, everyone. Chairperson Rose, and happy Thanksgiving week to everybody. So the September 30 report comports with the weather outside. It's a little bit gloomy, but since the end of the quarter, things have moved in a positive way. I will say that this year so far, it's been a very confusing year as far as market performance has gone. Things have not quite gone how we had expected them, but we are diversified and we have the benefit of time in a very long-term perspective. So I'm gonna go through this report. I'm not gonna spend a ton of time on the market environment, but to level set everything, I think it's important to have some of this. The information cutoff on this report is September 30th. We're going to talk about 10/31, and then I have a couple of figures as of last week's closing market value to add at the very end. Looking at the quarters, so the third quarter of the year, so July 1 to September 30, on the upper right-hand side up here, you can see that equities were negative. International equities were also negative, and fixed income, again, negative also. So this is a pattern that's been maddeningly consistent through some quarters since we started fully investing here. And do remember that the very early stages of the funding of this investment program was right after the invasion. Russia invaded Ukraine and created some international tension and market volatility that was unusual. So for the quarter, there was exactly one asset class that was positive, and that's 3-month T-bill. That's a money market fund, effectively for us. And also remember that during this year, we became cautious on the second round of funding for the other projects that weren't funded initially. Looking at the trailing one-year performance, you can see it's been strong. You can see the S&P over this period of time, despite this quarter here being down 3%, the S&P was up 21.6%. Going down to mid-cap stocks, those were up 13.4%. And you look at the Russell 2000 up 8.9. So market has favored large companies and it's favored technology companies over this year. When we look at international equities were also fairly strong, but notice that emerging markets, and the 3 biggest emerging markets allocations are China, India, and Taiwan, trailing performance pretty significantly. China has trailed economically since their late reopening from COVID. And we look at fixed income. Thankfully, over the last year, fixed income was positive, but quite marginally positive. And 3-month T-bills at 4.6%. So over the, I'll talk about rates in just a minute. Looking here at performance for the 1 year, growth took over again. We'll think of value stocks here over the last trailing year. So value stocks are insurance companies, banks, energy companies, materials, et cetera. And growth is going to be mostly technology, communication services, consumer discretionary, healthcare, et cetera. So over the year ended September 30, while all of the indexes were positive, growth did outpace value. In the equity investments we have in the domestic market, they are going to be typified by the Russell 1000 index, so the one right in the middle. We don't have a growth or value bias there. The mid-cap index and the Russell 2000 index, which were all positive. So again, this is the 1 year ended September 30. Remember, the very early stages were highly uncertain, highly volatile, and we're still trying to recover from that, but we're getting very close. Looking at the sectors, technology again, although energy has been strong also, those are two sectors that typically don't perform well at the same time. But over this year period, you can see that they have. And then looking at the top performers here, or the top 10 weighted stocks, we're going to focus on the Russell 1000. Apple and Microsoft both at or above 6% each. I don't know if anybody was following what happened with OpenAI or the ChatGPT parent company Friday and over the weekend, but apparently the CEO was fired on Friday and now he's going to go to work for Microsoft, which is pretty interesting, what's going on there. But then going to Amazon, NVIDIA, which is also AI related. They make the chips that make the AI work. And then the rest of them here, you have to go down to stocks 8 and 9 before it's not technology related in the Russell 1000. And that's Warren Buffett's company, Berkshire Hathaway, and then ExxonMobil. But just noticing how focused, how large the allocations are of these two companies, it's pretty amazing. It's a cap-weighted index. When their performance goes up, they become larger in the index. When they go down, it's negative. They become smaller in the index, so it makes it really hard to outperform, especially at the very largest companies out there. And just pointing out here, NVIDIA was not in the top 10 until this year, and they're up 258% through the end of September for the trailing 1 year. I'm going to not spend a ton of time on international, although you can see negative for the quarter, positive for the trailing 1 year. I'm going to go talk a little bit about interest rates and bonds right now. So bonds are different than stocks, right? They have a terminal value. You buy a 10-year bond, you get your principal back in 10 years plus interest along the way. Now, bond prices go up and go down, predominantly affected by interest rates. So interest rates have gone up over the last year, 18 months. That means bond prices have gone down. They've gone down significantly worse than they do normally. You look at here over the last quarter, we had another inflation scare. Inflation reduces bond prices. It's like a teeter-totter. It is a reaction function there. But looking over the last year, some important things are to note here. Treasury bonds, poor performance. They have no credit risk whatsoever, but they also have the lowest yield spread, or they have the lowest yield because there is no credit risk there. Mortgage-backed bonds down slightly, but then you go into corporate bonds and high-yield corporate bonds, and those are the riskiest parts of the bond market, but they have held up the best because they have a yield cushion, and their balance sheets have not eroded due to an economic slowdown. So those have performed very well. And you look at it versus their credit ratings, so AAA, AA, and then the lowest investment grade, it's a similar pattern. The riskier the bonds were coming into this downturn, the higher the yield they had, the higher yield has helped them preserve value better than treasury bonds. And then going into interest rates here, yield curve remains inverted. It's done a little bit better. 30-year bond has gone, this is as of 9/30. It's fluctuated. It went up during the quarter and after the quarter, but it's come down, back down to about 4.7 right now. And again, you can buy a 1 year or a 1 month T-bill and get 5.5% annualized yield on that, or you can buy a 30-year treasury and get less. So this is not the normal relationship. Some say this predicts a recession. Other people say it causes a recession, and we really don't know because economics is not a hard science. Economics is a behavioral science, and its predictive value of any economic theory changes over time. So going into the performance of the total accumulation of all of the assets, all of the projects. You can see the numbers are very close. The gray area is the net cash flow. You can see it at the beginning, again, going back to first quarter of 2022, the funded value of $110 million, and you can see that's over the entire time, but it was $80 million, and you can see that at the very beginning, there's been a deficit, and it's been bumpy, but it has increased, and we're closing in. And one thing I want to say is that performance has been good recently, but we're not expecting huge gains over very short-term periods of time. We understand that this is a long-term project or series of projects, and that requires a long-term mindset. We're not going to say equities look good for the next 2 months, so let's push more into equities. That's not the way that we do it. And if you look at this second upward slope into the net cash flow, this is $30 million that came at the middle of this year, and we've been cautious with it. We've allocated it only to money market funds, so you'll notice on those projects, they're closer to their principal value. Over time, we have expected returns of the portfolio of better than 7%, right, using the latest long-term capital return expectations. And those are higher than they were even last year when you look at diversified portfolios. So looking at this, at the end of the September quarter, the total market value was 108. The total value of contributions was $111 million. So at that time, the deficit was $2.9 million. And again, we're gradually making that up over time. Looking at the individual projects, we now have these listed individually with their contribution and their market values. So you can see beautification was funded with $5 million. Ending market value was $4.78 million. Do notice that the gain and loss here is $207,000. Distributions of $8.7 thousand or $8,700. And then we offset this with income. So you can see that it is under its value. Looking at this, it's the same for the Freedom Civil Rights Project, the Innovation Center, Senior Wellness, Total Youth Centers, but this is the second set on this page moving forward. And again, we account for these individually. So Parks was funded during June, $16.5 million. At the end, 16.7. And why is that? This is invested in a money market fund, and money market fund is paying about 4.75% interest per year. Now, will this remain invested in money market fund forever? No. Gradually, we will be reallocating it towards the target value for the entire portfolio. But as of now, given the current state of uncertainty in the markets and the economy, I believe it is prudent to move gradually. Given perfect hindsight, which we never have, would it have been better to take this approach to the initial investment? Yes, it would have, but we would have gradually been moving into the long-term diversified portfolio that's meant to produce returns. In fact, if we go back to the first quarter of 2022, I believe interest rates were 0. Money market funds were paying 0, so we did not have the same opportunity to invest in a yielding asset with very little risk at that time. However, markets have evolved this way. So looking at this, streetlights, slightly more than its principal value, youth centers, slightly more, et cetera. Now looking at the total portfolio over time, so this is just a proportion of assets. This is not the amount of assets, which is why it's level across the top. And you can see we did initially invest to our long-term target allocation. However, once we had the second tranche of fundings here, it increased the amount of cash to 30%, which is pretty significant. And you can see it reflected here as well. And again, $79 million as of June 30. We had an additional $30 million coming in, and then we have this market value. So the total principal is about $110 million. Looking at this, the portfolio is well diversified. The equities, as far as the domestic equity and international equity allocations, are passively managed. It's low cost exposure to the markets. Fixed income has been positive, and that's been a positive overall effect. You can see cash as of June 30 is $3 million. As of September 30 is almost $35 million. So that is the infusion of the second funding source. You can see here we also lay it out for the individual funds, their asset allocation. So this is for round one of funding, round one. And then when we go into parks, you can see it did not exist as of June 30, but it was funded during the quarter, and it is all cash right now. Same for all of these. And you can see that our asset allocation, these are red because it's for the total fund. We have too much cash. We have more cash. But by policy, if extraordinary situations or circumstances exist in the market, you are allowed to de-risk the portfolio, and that's where we are right now. So we took a portfolio that had what I would say is upside and downside risk about the same, and now we have a portfolio that has much less downside risk than it did before. And then looking at our funds, over the trailing year, it was a strong year for performance. This is the total fund. It was up 13.39%, even with a modest loss. Where did the returns come from? We're going to go on to this slide. You can see the S&P 500 was up 21.6. You can see the mid-cap index up 12.6, and the small-cap index fund 12.5. International equity was 6.5% of the total. As of September 30, was up 20.5%. So that's phenomenal result. And then even going down to fixed income, we have positive returns there also. Cash composite was better than our core fixed income. But going to the inception date of the portfolio, as of September 30, it was still down 4.1% on an annualized basis. So we don't have 3 years of returns because we have not been investing that long. I think I will end this report here, except for one more slide I need to show. So as fiduciaries, we have to understand what investment policies we have, that we're abiding by those, and we are. There's no major changes in the organizations that are managing the funds, and you can see the estimated annual fee as of September 30th. It's incredibly low. It's very reasonable. The index fund for the overall trust, you have $20 to almost $23 million being allocated to that portfolio, and it costs $3,401 to manage per year. So the total fund composite expense ratio is 12 basis points, which is very reasonable. The fiduciary standard is reasonable, and you're much, much lower than the average fund of your size out there. So that concludes the September 30 quarterly report. I'm happy to answer any questions about that.
Any questions for Doug? Okay. Thank you. Oh. Got it. Okay, so we need a motion and a second to receive that report. Please cast your votes. Motion passes. Thank you. Moving on to the monthly investment reports for August 31st, 2023, and September 30th and October 31st.
If I could just cover the October 31.
Sure.
Because those other 2 months were
Included in the quarterly, right.
Correct. So this was the month. It was a negative month. Inflation was still weighing on the markets, as well as international issues. You can see that equities were down during the month. International equities were also down, and fixed income were down also. So diversification, traditional diversification, has not worked during these periods of elevated market volatility. Here is the market value. It went from $110 to $106 million, so it was negative even with the lower risk portfolio. However, it was helpful at the total fund level to have the cash that we did. we look at these, you can see downtrend during the month. You see that the second round of funds were still positive. So cash did not go down. Cash holds does hold its principal value and it pays income. So since inception through October 31, this portfolio is up 1.33%. You can see its unit value is above 100, which is where we hope to go with the total portfolio. Not a lot of change here on the individuals, which is new for the report. You can see for the total fund, 6.62% for the trailing 1 year. And for the since inception, it actually declined a bit because October was so difficult, down 5.98%. But again, the portfolios are tracking their benchmarks across the board. The International Index Fund is actually doing better, and our 2 bond portfolios are doing well. PGIM is less risky than its benchmark, so that's why it's underperforming a little bit. That is the October 31 report. I will say, I looked as of last night. November's been a positive month for equities and for fixed income. The total market value as of Friday night was $110.6 million. The original funding is 111.2. So we have recovered to be less than $600 million total below corpus value, which is about 0.5%. So although September was difficult, although October was difficult, maintaining our long-term allocation and the fact that markets do tend to go up over time was very helpful during the month.
Okay, any questions about the October report? Yes, Robert.
So what happened in November, I'm sorry, at the end of October into November, result of cooling economic indicators and maybe a little drop in inflation.
Yeah, we're in this weird stage where poorer economic growth and higher unemployment is positive for the markets. The Federal Reserve, their singular focus right now is fighting inflation. Last year, inflation was double digits, right? We've never seen this since the 1970s. In prices of your average good over the last 12 months is up about 25%, right? Inflation is cumulative. The numbers we're getting today say that versus a year ago, consumer prices are about 3% higher. So we went from, cumulative inflation of 23%, which is painful, but it's much lower. We saw very soft economic news last week. We saw an amazing rally, right? Incredible. The Federal Reserve has toned down their language, saying that we may be done raising interest rates, and unemployment going higher. I mean, it's this weird phase of the market where bad news is good news. But good news on the corporate world is that growth was pretty strong during the quarter. Individual companies reported they're making progress. Inflation is actually good for a lot of companies out there because they get to raise prices.
So is that growth, I know you said it's across the board, equities and bonds as well, but within equities, was it mostly within the large cap?
Saw recovery at all across the board, and I'm really, surprised at how well international equities have done, right? If you think that our economy is kind of weak and slowing and having some inflationary issues, you look at Europe and other places and it's been worse than that. A real standout right now as far as strength is Japan. Japan is really showing some surprisingly strong recovery right now, given the fact that a lot of their trade is with China, but they're doing pretty well right now. The technology companies are doing very well. Oil did go up from the low 80s to 90s, and I looked this morning, WTI is at 77. So that's good for inflation because oil and gasoline prices are huge. One thing that I will say I'm watching very carefully is private equity and private real estate. Because I think while there's been price discovery, right? Share prices have gone down, bond prices have gone down. There haven't been a lot of real estate transactions going on, so we don't know how much lower the prices are going to go. But we do know that there's about $800 billion of office supply in the United States that's no longer necessary. And there will be a long-term reckoning there. How soon and how fast that happens will dictate, but there will be opportunities there. And that's something that we are monitoring very, very carefully.
And I do have one other question, it's more housekeeping. I think our investment policy requires us to review it once a year. Have we done that?
We haven't made changes to that, but that's a good year-end type of housekeeping item. And we do have another educational meeting scheduled, and that might be a good time to address that. That's a great question. Thank you.
Great question. Any other questions for Doug? Okay. If not, we'll take a motion and a second to receive the monthly reports. Please cast your votes. Okay. The motion passes. Thank you. Doug, thank you for being here in
Thank you so much.
person. We appreciate it. Okay, moving on to item 3C, presentation on the Oklahoma City Maps Investment and Operating Trust distribution process. Matt, City Treasurer, is here to present.
Well, good morning. This may look very similar to what we looked at last month because it is almost identical, but and even Doug's presentation really shows the importance of looking at this every month. As we're building this trust from scratch, there are two time frames that we need to look at, right now and going forward. So as we set up these processes, there are things that are going to be taking place for years and years to come, for the 40 years that this trust will be overseeing some of these operating and maintenance type activities. But also we are in this interim, this short-term period where we do not yet have 36 months, do not have 12 calendar quarters to work with. And so it's imperative that we look at this. Mr. Anderson talked about our January 29th education session. That will be extremely important. One of the things that we will look at is continuing to develop this process of what the distribution process will look like going forward, specifically for this upcoming year. You can see from our balances that not all of the projects will have excess funds. And one of the things that we have from this body is you have the ability in our spending policy to approve the both amounts and percentages that are distributed to operators. And so that's one of the things we just want to keep cognizant as we look at that. And by the time we meet in January, we will know what the 12/31 balances are, which will give us a better indication of what things will look like. Just to walk through this in January, on a typical year, that's when we would get with the investment consultant and look at the calculation. Obviously, for this year and next year, we won't have those 12 calendar quarters to work with. And so there will be, luckily we have in the spending policy that discretion that this body is given. That would be then presented at the February meeting, which would be the indication to do that. And at that point, the distributors would then, the operators would be able to submit their request. Now, Mitchell, if you could move to the next slide, just go show the picture of a distribution form. I should have written draft all over this, but one of the things that Trustee Johnson at the last meeting wanted to have a picture of this just so we could have there and displayed out there. This will be modified by the time we go live for our first distribution, but this is a rough draft, and I have to say many thanks to Chair Rose for her help in this, and Randall and Mitchell and my staff for the work that they did to put this together. Essentially, really simple information that we would be requesting: the name of the project, the name of the operator, what type of request it is. Is this operating and maintenance? Just going by that. The extremely important amount. What is the amount of the distribution request? And even just to prove the point that this is a draft, we had significant discussions last week that we're leaning towards making this an annual only distribution. So at the beginning of the year, the one annual amount would be given instead of doing a quarterly or a biannual system. That would work. That's consistent with how other bodies that operate similar to this do that. It would also be easier to track from a staff standpoint with the number of operators, especially when you go years down the road when we have a number of these projects that are operating. And so this is one of the agenda items that we will have on our January 29th session, would be to look at this form, see what other types of information that you might want included in this, and get a better idea of what the finalized product would look like. But we wanted to make sure we included at this meeting and this discussion just so that both you as the approving body and also the operators might have an idea of what to expect when it comes to requesting those distributions. And Mitchell, if you can flip back over to our timeline. As we said previously, we do not operate in a vacuum, and it's worth noting that April and May is when the city departments are working on their capital and operating budgets. And one of the things that Trustee Bryant wanted to make sure that we did, is his capacity as finance director, was make sure that this fit into the overall budget process for the city of Oklahoma City. In our regularly scheduled May meeting, the trust would then be presented with those requests for distributions. All of those requests would come into the finance department, and that staff would then present that to the trustees for approval. And in the situation going forward, in July, which is the beginning of the city's fiscal year, we would then make those distributions. And as I said, it would most likely be an annual distribution in July of each year, which would coincide with the city's fiscal year. This is a living, breathing process. There are many things that we're figuring out. One of the questions that Trustee Ponkela brought up at the last meeting was, in that time, once we've had the calculation between January and May, is it going to change? And so there may be a situation, and this could be something that we could update in our spending policy to say, well, if we feel like the amount needs to be secured, maybe we move that over into a safe investment like a money market account. Those are the things that haven't been decided at this point, but it's the things that we need to talk about and look at as we move forward, because while 10 years from now, 15 years from now, we'll have plenty of experience, and we'll kind of build in that safeguard with the looking back at the 12 calendar quarters. Here early in this process, we don't have those same safeguards in place. And so every step we take is essential to make sure that we're preserving the corpus, which is part of our mandate with this. Any questions about this process or the distribution form, or things that we need to consider with this as we look forward to our January workshop?
Matt, one thing I did notice, and shame on me, but on the form, we need to add the year.
Yes.
Like maybe at the top, like 2020, or, FY25 request, or, we need to be sure and add that somewhere.
Especially as we continue to move forward and the number of operators and requests
Right.
will go up. Absolutely. We can definitely include
Okay,
that.
Anybody else? Oh,
I have one quick question on when you're asking them to distinguish between operation and maintenance. Are you talking about like building maintenance, facility maintenance, like roof repair, air conditioning? Is that what that is meant?
So some of the projects, like the youth centers, for example, have both an operating and a maintenance pot of money. And so we need them to distinguish and tell us which pot of money that they're wanting to request out of. But that's really, and so maybe we need to clarify that question.
I think you do.
Okay.
I think you're talking about building maintenance and that type of.
Right, yes.
I do think that that is the intention, is
Right.
that capital maintenance of the asset, not,
Right,
yeah.
yes. But yeah, so maybe.
Not the janitor services.
Yes.
That would be an
I just think
operation.
that just needs to be
operating.
clear.
That would
Right.
be an operation.
Okay.
Yeah.
And to that point, the youth centers is a perfect example because even the timing of when we got the distribution is different for the operating side as opposed to the capital, because we're assuming that capital maintenance could be years down the road before we need that, whereas operating, they would need when they open the doors. And so that can be seen that way as well.
Other questions or comments? Okay. Well, this will not be the last time we look at this, so thank you, Matt, appreciate it. Okay, moving on to item D, renewal of agreement with BOK, Bank of Oklahoma, for custody services, estimated at $30,000. So this is year 3 of a 5-year contract that was originally approved in November of 2021. If you've got any questions, staff are here, but it's just renewing it for the next year. Any questions? Okay, take a motion in a second. Okay, please cast your votes. Okay, motion passes, thank you. All right, moving on to item 3E, calendar year 2024 meeting schedule. Matt, do you have anything on that? No, we just have to approve the meeting schedule. Okay? Take a motion in a second. Cast your votes, thank you. Okay, motion passes, thank you. Moving on to item 3F, ratify claims from September 27th, 2023 to November 7th, 2023. There were 3 claims totaling $3,500 that were all related to external auditing. Any questions? Not, I'd take a motion in a second. Please cast your votes. Motion passes, thank you. Moving on to item 4, comments from trustees, staff, and interested parties. Did anybody sign up to vote? Okay, no public comment. Trustees, any comments? Anything? Staff?
I do just have one comment, and that's more of a recognition. From day one of this trust from the Treasurer's Office standpoint, my right hand, and this has been Randall Lewis, our Assistant City Treasurer, who has actually received a promotion. He will be the business manager for the finance department. And so luckily for us, he's still going to be within the finance department, so hopefully we can still get to use him for some of the stuff of the trust, because he is the expert on a lot of these things, and we could not have done most of what we've done through this process without Randall. So just want to say congratulations to
Congratulations, Randall. That's exciting. But glad that doesn't mean you're leaving us, so thank you. And you've been absolutely fantastic. Great to work with. And I just want to say happy Thanksgiving. I hope everybody has lots of joy and laughter and some great food. Anything else? Okay, if not, we are adjourned.